Hey guys, how's it going? It's Andy. Today we're going to be talking about one of my favorite stocks out there. It's a part of my retirement account, it's part of my dividend investing portfolio, and it's going to continue to be that way for the longest time. When I'm looking at stocks that I love going into 2022 that are at a discount, Nike is the top on my list, even though it has recovered significantly in the past week after a fantastic earnings report that has pushed up the stock around 8% in the past 5 days. The stock is still down around 20% so far in 2022. That makes it a fantastic buying opportunity for my portfolio, as it's a company I want to continue to build my portfolio and my financial future around. Before we get started, I do want to say happy birthday to my dad, so be sure to say happy birthday down in the comment section down below. He's the main reason why I got into investing in the stock market and why I'm still making these videos today. So happy birthday, Dad. So in today's video, I'm going to be talking about why I think Nike is a fantastic option for not only my dividend investing portfolio and for my growth stock portfolio that is mainly going to be my retirement account. My retirement account is mainly focused on growth stocks because growth stocks have a very long time horizon. Retirement stocks are ones that could do really well in the short term, but also have a lot of volatility. That's why I'm heavily invested in stuff like renewable energy. I believe the renewable energy stocks are going to be one of the best places to invest in the next 5 years. But as we've seen in the past year and a half, it's had a really tough time. And since I'm not going to be needing this money until I'm 65, 70 years old, there's plenty of time for the money to sit in those different stocks and build wealth over time. And I think Nike is a fantastic mix of the two, of a growth stock that has been around for a long time, has a fantastic track record, but is also one that pays out a decent 1% dividend. When you look at dividend stocks out there, a lot of them don't have the track record of something like a Nike. So I think balancing together a 1% dividend with an incredible track record makes Nike one of the best dividend growth stocks out there. And that's what we're going to talk about into today's video. So Nike, as I mentioned, had their earnings report this past week. We saw very positive numbers overall, and the stock jumped around 5% after hours. And as the market has done very well in the past week, things have gone very well with Nike stock. Still down 20% overall in the year, so we're still not to where we were. When you look at that earnings report, the main thing that really jumped out to me is that North America continues to be one of the bright spots when it comes to Nike. I was very surprised to hear that when it comes to regions that make up the most amount of revenue for Nike, North America comes first, then Europe, and then China third. I really thought that China was going to be above Europe and was going to be competing with North America to be the top region when it comes to sales. So China overall has had a pretty tough time for Nike overall. There's been some boycotts about Western companies, and with the global turmoil, that kind of makes sense. But seeing that North America is the highest numbers when it comes to revenue and sales, seeing the numbers that came out of there, that was the main reason why Nike jumped after those earnings. We still have the supply chain problems that we've kind of gotten used to at this point. But Nike has tried to combat that by being proactive when it comes to ordering their inventories. So when you look at their inventory numbers, the balance sheet when it comes to inventories is $7.7 billion, which is up 15% from year over year. That's mainly from the supply chain, but also from higher than expected demand in the North American markets. We've seen a fantastic change with Nike recently announcing that they're going to be no longer selling their products with Foot Locker, which is one of their long-term partners. And that is a fantastic thing because in the past, Nike has sold their products in a variety of ways. You have the wholesalers. You can find stuff from Nike at Costco. You can find it at Foot Locker. You can find it at pretty much any of these large nationwide chains, which is great for getting their product out there. But Nike has become so good at selling their own product that they're going to try to sell everything from within Nike. That's going to increase sales because people are finding all the things that they need on their website and not having to go out to a third-party company. But it's also really going to improve their margins because the reason that you can go to some of these wholesale stores and find Nike products for a discount is they're selling them bulk to those companies and they're not going to be making as much money. So being able to sell them from their own website, from their stores, is really going to benefit their bottom line in the long term. So when I look at this last earnings report, I see a lot of positives. You do see some negatives when it comes to the numbers coming out of China. Not really worried about that. We've seen that Nike has been able to transition from mainly selling in brick and mortar stores to selling online as the pandemic has really changed the way that people shop for goods. So when you look at their revenue, you saw wholesale revenue down 1%, while store sales rose 14% year over year as shopper traffic they described it as being normalized. So that's what we're talking about with the wholesale products are not going to be sold as much, but they're pushing people towards the Nike stores and the Nike websites. Digital sales jumped 19% from the prior year, fueled by 33% growth in North America. When I look at that, I see fantastic things. Let's talk about why I think Nike is a fantastic option for a dividend investor like myself and for a retirement investor, someone that wants to buy a stock and just kind of forget about it for a long time. When you look at deals in the market right now, there's not a lot of blue chips that are down significantly that have the track record that something like a Nike does. While it is down, 20% so far this year, it has incredible returns over the past 15, 25 years. So when you look at Nike compared to the S&P 500 since 1995, I like to pick 1995 because it encompasses a lot of market turmoil and different market conditions. And since that point, Nike has had an average annual total return of 16.79% compared to the S&P 500 of 9.93%. And when you take out the dividends for Nike, it still is 15.71% compared to 8.72%. So Nike is one of these stocks that I consider a dividend growth stock because they do pay a pretty decent dividend, 1%, when you look at these blue chip stocks. You're not going to find these types of returns in most of the companies that you'll look at. But I consider it a growth stock because, one, it can do that well without the dividends, but the dividends has allowed them to bolster accounts that maybe wouldn't be buying as many shares. Someone like myself that does not make a lot of money, the dividend reinvesting is a fantastic way for me to increase my position size on a company like Nike that I want to own more of. When you look at the dividend history of Nike, we see a lot of growth in the past couple years when it comes to their dividend growth rate. The past 3 years, 11.28%. In the past 5 years, it's around 7%. 10 years, 15.71%, and 20 years, 18.43%. So you might be looking at that and going, then why is the dividend yield around 1%? When you have these growth stocks, you have the stock price go up significantly. When you look at dividend yield, it's the dollar amount that it's paid out compared to the current stock price. So when a stock like Nike goes skyrocketing, it's going to decrease the yield over time. When I started making this video, the dividend yield for Nike was around 1.02%. And now when you look at it, let me see what it says, stock dividend, it is down to 0.92%. So as the stock price goes up, and with a growth stock like Nike, you're going to see very large swings, mainly to the upside when you look at its track record. That's going to decrease the dividend yield. So we're looking at the dividend as not the greatest source of income, because 1% you can find plenty of options that are going to pay you more. The reason that I like Nike for the dividend is if the stock price continues to fall, it's down almost 20% so far this year, that yield is going to increase. So you have the negatives of the stock price going up is going to decrease yield, but as the market turmoil continues and we really don't know where things are going with inflation, just everything that's going on with the market, that yield is going to increase and it's going to allow me to buy more shares at a discounted price. So I love basically whichever direction Nike goes. In the long term, I do want it to go up. But if it does go down or sideways on the short term, I'm not really worried about that because I'm going to be paid out the dividend. And if the stock price goes down further, I can buy more at that lower price. So overall, I think Nike is a fantastic option. Doesn't really matter what type of account you're looking for. I love Nike for my dividend account because it's going to pay out around 1%, but it does have the growth potential. And then that growth potential is fantastic for a retirement account that's going to be sitting there for around 40 years. Nike has a fantastic track record when it comes to not only their stock returns, but with their dividend growth. And obviously, if you're having dividend growth rate of 18.43% in the past 20 years, that's fantastic, but it's not been able to keep up with the price of Nike overall. When you look at its 52-week range, it's sitting on the lower end with the upper range being at around $180. And the 5-year dividend yield still sitting on the lower end, but it's only been up to 1.38% in the past 5 years with a payout ratio of 25%. Very low when you look at its history. This is not a company that I worry about in the slightest when it comes to their dividend. Nike is a blue chip stock that has a track record of keeping plenty of cash on hand to deal with changing market conditions and being able to pay out that dividend in a reliable way. That's why they've paid it out for 37 years of paying that dividend. So the last thing I wanted to put up is the annual revenue when it comes to Nike. You do see the dip when it comes to 2020 with the pandemic, but they've showed that they can switch their business from mainly a brick and mortar type of business to an online focused business, and that's why we've seen that with the digital sales increasing so much in the past year. When I look at Nike, I see a lot of positives and a positive stock that is at a discounted price, in my mind, is always going to be a buy for my portfolio. This is not financial advice. This is just what I think about Nike at this current point and why I continue to buy it for both of my different stock portfolios. I'm very curious to hear what you guys have to say about Nike, and if there's any stock you'd like me to do a deep dive in, let me know in the comment section down below. If you made it this far, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. We're trying to reach 10,000 subscribers, and I need your help to do that. Thanks for watching. I appreciate all the support, and I will see you in the next video.